looked at what people out there are looking for, what are the challenges they have about signing on insurance, and this is a product that is seeking to respond to that. One of the things we found out is that the traditional products are heavily sort of risk-based. They sort of amplify, the death benefit. So on a critical illness, in addition to, say, the savings component. And for a typical 24-year-old who's just getting their first paycheck, the discussion around death and the discussion around critical illness, first, they probably do not even know the definition of critical illness. So when you say cancer and you say heart disease and you say, kidney transplant, it's still very foreign. And they are not really at the point where they are talking about dependence and therefore if I'm not there, so what happens? So we saw that as a very huge gap. Key in this product is that we want you, a youth, we are looking for that person who has a plan for the future. If that future could be in 3 years' time, could be in 5 years' time, maybe you want to go back to school, maybe you want to plan a trip abroad, maybe it could be even for a wedding. People have even said nowadays dowry, you need to also start saving early. So we are talking about that particular individual who is not necessarily setting up a current account to put in money and pick it tomorrow. That is not, we have other products of that nature.
Britam Life, which is the reason why we are here and the product we are launching, is the market leader, not just in Kenya, but actually in the entire East, Central, and Southern excluding the Republic of South Africa. We are the biggest life assurance company in this market. And our desire and our aspiration is to continue that market dominance, not for its own sake, but for the sake of providing the market, the customers, the population in these countries with products and services that enable them to be more resilient in the way they conduct their business, the way they run their lives. And insurance, as we know, has a principal aspect of enabling societies, enabling communities to be more resilient.
If I just showed you 100 shillings, you wouldn't see it as value. But when you see it as 3,000 shillings, something that you just put away as you go, then it really begins to make sense. So the conversation with Imarika is build as you go. So once you've begun with your 1,000 shillings or whatever amount, and the emphasis is not really 1,000 shillings, it's largely to ensure that we can access a larger market. Then from there you can contribute as you move on. The product, as I said, free life insurance of 50,000. If the customer would like to purchase more insurance cover, that is possible, and we're able to compute that for them at an additional cost. And let them know, would you like 1 million shillings more life cover? That is possible, because at that point, then the client really appreciates why they do need to purchase additional cover. We also talk about a minimum term of 5 years. And a lot of the conversations I have is, why can't I withdraw tomorrow? But the issue around investment is also around discipline. So how do you then develop a culture where you actually put something away for yourself and actually begin to see return? You have optional, early, or partial withdrawals, and this is key for us because we're saying, fine, 5 years, maybe you need money sooner, then we will make that possible. You can make partial withdrawals, and we would like you to make this partial withdrawals after year 3. Accumulate something reasonable. So at least then, even as you're making withdrawals, then you can be able to do it. The other amazing feature about this product is the withholding tax. You do not have to pay withholding tax on Imarika. So you actually save 15% of your interest for every time that you are investing in Imarika. I want to illustrate. For example, if you make an interest of 100,000 and you had, for example, a fixed deposit, you'd retain how much? 85,000 of that interest. With Imarika, that 100,000 remains intact. So then again, that becomes some form of return to yourself. And that then continues to emphasize why you want to do it longer. And because it is a life insurance policy, it also enjoys the tax advantage of tax relief for as long as the term is at least 10 years. And that is 15% of whatever you contribute up to a maximum of 60,000 a year.